It doesn't sound like a massive deal, but it is quite a strategic deal because this is something that the two companies have been playing out for the last 10 years, really dividing up the Kenya and the Tanzania markets.
Yes, so I think what's happened is that there was cross-competition between the two businesses. There was this cross-holding, and effectively the competition intensified about 2 years ago. There was a bid by Diageo to acquire Serengeti Breweries in Tanzania. SAB then put an injunction in place. The competition authorities have intervened. And this, I think, is the ultimate result of what has been a protracted legal battle between the two entities. So it's back to what was, in the old days, a significant battle for share between SAB and Kenyan Breweries, or East African Breweries Limited, for share in either both Tanzania or Kenya.
Where does this leave SAB Miller positioned in the Kenya market, though? Because it has the Tanzania breweries in Tanzania. How's it positioned in Kenya now?
Sure, they're going to have to access the market via exports. The question will be, what are they going to use with the capital? Are they going to build their own independent brewery in Kenya? I think that's still up for debate, because I think to compete effectively in that market, I think they're going to have some capacity presence in the market.
And I think that's what they've experienced in Nigeria, where they're also trying to grow their presence there because they have a tiny stake compared to rivals like Diageo in the Nigerian market.
Sure, I think in context, if you look at SAB's positioning in Africa, it is the dominant player in Africa. Kenya is obviously a market now that's not within their portfolio. Nigeria wasn't in their portfolio, and they're growing that business through organic measures. They bought a brewery in Port Harcourt, and they're also now on greenfields where they're building their own brewery. They're putting down, I think, a brewery for $100 million. And yes, an exciting environment for them. And Africa, once considered the dark continent, is now seen as a very exciting opportunity for brewers.
Do they need to be in the Kenya market in your view?
I think it's a critical market within the East African part of the continent. It's a large market, nearly 4.7 million hectolitres of beer, so it's an attractive market. The price paid effectively for SAB stake equates to about $250 a hectolitre, which is an expensive price in reality. One looks at the returns one gets from African brewing, but nonetheless, I think it reflects the growth opportunity in Africa.
Now, they've also been looking at Ethiopia in that market as well, haven't they?
Yes, they have. It's been quite competitive. As you know, Heineken bid in Ethiopia against them. I think if you look at in Sudan, southern Sudan, they're entering southern Sudan. So there's still a lot of opportunity for growth in Africa. And SAB have invested a lot of capital in the last year and a half, and they're starting to harvest some of that investment as the capacity grows into that investment in new capacity. It's a significant business for them. They do nearly $3.4 billion of turnover in Africa. It's a significant market for them now.
And if we look back to the results which were released quite recently, it really showed that Africa and Asia were the growth markets for SAB Miller over the past year at least, while North America and Europe still pretty stagnant due to the problems we're seeing over there.
Sure, and I think the growth coming out of Asia and out of Africa is one of the embedded attractions for SAB. You know, Graham Mackay has always been very clear in saying he's going to have the fastest embedded growth rate of all brewers in the world. And having access to these emerging markets has delivered that level of growth. And what you're seeing in the world is the fears of double dip in terms of recessionary conditions. There's a thirst for growth, and SAB Miller provides you with a business that's delivered stable returns over a long period of time with growth.
And do you think the focus will continue to be on these developing markets? Because previously there were some rumours that it could be looking at Foster's in Australia. The news out this morning is that Molson Coors and a Mexican brewer are potentially looking at buying Foster's. Do you think the focus for SAB Miller will remain on developing markets? I know that it did buy Miller's a few years ago, which was a break away from that trend.
Yeah, I think we can break that question up a bit. I think first of all, if one looks at the entry into the US, it was access to a developed market brewer to try and balance their currency mix. I think there was a lot of concern at the time when the rand was weakening significantly to give them currency balance. I think their underlying strategy is to focus on developing markets. It's their core competency. They understand developing markets. They understand how to develop brands in developing markets. And that's become a whole new competency for SAB. It's become a far more brand-led, strategic-focused business than it was in the past. From a unitary market in South Africa to a multi-market, multi-disciplined organization. There's been enormous evolution over the last decade in this organization. In terms of the rumor about Foster's and the potential for Molson Coors joint bid with Modelo, I must admit, I must throw cold water on that. I find the idea of, it's akin to sort of Coca-Cola and Pepsi joining hands to bid for the same asset. As you know, ABI, the largest brewer in the world, has a 50% stake in Modelo. I find it very difficult to consonance how Modelo and Molson Coors would join in a bid to acquire Foster's. I don't think it's beyond the realms of possibility, say, for instance, a Molson Coors SAB Miller joint bid for Foster's, although I still think Foster's is off strategy, although it's an attractive market in terms of the profit pool and the high profit per hectolitre of the product in Australia. It is a ex-growth market and doesn't fulfill the franchise of a developing, fast-growing brewer like SAB Miller.
And of course, we had Foster's this morning also saying that they were unaware of why the share price was moving so quickly. And where will they be looking? Because during the recent results, Graham Mackay did say that they are a growth company. They do look for opportunities. What sort of opportunities will they be looking for? What
they look for is growth in contiguous markets, within markets that can expand where they are currently. I think markets such as Brazil is a market that I think they would like to enter into Brazil. I think they'd like to expand further in Latin America. As you know, they've recently entered into the Argentine. So I think the idea is they'd like to continue expanding in the developing world. I think there's some real opportunities within Africa. I think ultimately acquiring their partners Castel will be a significant transaction, about a $12 billion transaction, a complex transaction, because there's cross-shareholding between Castel and SAB Miller. And then maybe potentially in Europe, if one looks at developing Europe, counters like FS, I think that's an interesting brewer. In Turkey, also has interesting exposure into the Ukraine. That also provides further enhancement to SAB Miller's thrust into that part of the market.
And of course, with Castel, they do have rights of first refusal if this group does eventually go up for sale, don't they?
Yes, they do. There are preemptive rights that do exist, and it is a fantastic asset. And certainly if SAB were to acquire the balance that they don't own in Castel, would certainly put them in an unassailable position in the African continent.
How about the rating of SAB Miller? How's the market rating it at this stage, around 243, 244 Rand? Because it hasn't done very much this year. It's up about 3%, despite those good results we saw last month.
Yes, I think SAB Miller, to a degree, is almost a victim of its own success. It's priced for perfection. The counter is trading, we think, it's fully priced in terms of its current multiple. We have it on a neutral rating. And that's really just to reflect what we think is its ability to deliver sustained, ongoing returns. But we don't see immediate catalyst to the share price in the short term. I don't know what catalyzes the price from the current levels. They have to consistently deliver on what is a very high hurdle. And the base effect in SAB Miller is now becoming quite significant. But if you look at the cost-saving initiatives, certainly they've implemented a world best practice initiative to extract costs out of the organization. That is certainly tracking well ahead of forecast. And I think those cost initiatives, if we combine that with some underlying organic growth, I think will create an enormous lever to profits over the next 2 to 3 years.
Any concerns about the group at all, Julian?
At this point, no. I think the group is very well positioned. I think their focus on costs is very pleasing. I think they've gone back to basics. So I think the organization is in a good space. I think the only underlying maybe concern of the market, and maybe my own, that is of succession. We've just had the recent retirement of Malcolm Wyman. Certainly his retirement, the potential retirement of Graham Mackay, and the coterminous retirement of Maya Khan would see a lot of the DNA of the organization departing. It would be my preference to see Graham Mackay step up into the chairman role. I know that is against ostensibly the code, going from an executive role to a non-executive role, but I think one wants to sustain the DNA in the organization of Graham to keep the business going on track, the path that he set over the last decade.
How about the second tier of management, including Norman Adamy and everybody? Do you think there are people to step up to the plate?
Certainly. One thing SAB has a richness of depth in its management. Graham has been an amazing in terms of developing talent throughout the organization. They run a very strong talent pool development program. Tony van Kralingen heads up both procurement and HR, and he's instrumental in terms of developing talent in the organization. And one thing you'll find when you deal with SAB Miller is that there's enormous depth of talent in the organization.